Welcome to TRADER24 Studios for your daily financial update on the global markets. The problem of the recessionary tide keeps burdening the investment community, with a justification based on the highest observed inflation, which in the US at least is at 40-year highs, while the Eurozone cannot under any circumstances tolerate the 9.6% rate of June, far from any expectation in the limit set by the ECB. And considering that the bomb is in the hands of the central banks, which are called upon to tame the dysfunctional situation, it seems that an artificial recession by them would be a better scenario than a break in aggregate demand. After all, the Chinese economy has also been showing signs of fatigue for some time now, and expectations for a recovery in the next 2 quarters of 2022 are also minimal, at least in the words of both the international houses, with their damning reports, and the IMF, which the other day brought in a 3.2% figure after revising from an already lower 3.6% to global economic growth. Moreover, it should not be neglected that the US, in addition to now officially having a benchmark interest rate in the range of 2.25 to 2.50% after the second consecutive record increase of 75 base points, is also in recession, at least on a technical level, as a decline in GDP growth was recorded last week for the second consecutive quarter. In other news, there has been a welcoming softening of the massive US dollar markets, partially decompressing the energy market. Commodities continue the mismatch of dangerously high energy costs and a precipitous decline in agricultural commodities in the shadow of an endless war. The freight market remains depressed, reflecting the possibility of a slowdown in economic growth, and the government bond market is trying to find its footing in a context of investment uncertainty. You are watching TRADER24 Daily Global Market Overview. Let's take a closer look at the situation. Wall Street moved into negative territory, with investors trying to weigh the risks lurking in the shadow of the recessionary threat. S&P 500 and Nasdaq 100 closed with controlled losses. The industrial Dow Jones was pressured to minus 1.23% due to Caterpillar, which saw losses of 5.82%. The New York Stock Exchange index at minus 0.81% and firmly above the 15,000 points that have plagued it for 6 weeks, and the small cap Russell 2000 unchanged. The VIX risk index gained another 4.60 percentage points, shaking the optimism of buyers. At the sectoral level, all 11 S&P sectors closed negative, with real estate posting the largest losses, minus 1.30%. Key negative leaders in the large cap were Molson at minus 10.46% and Zebra minus 9.80%, while in the small cap Habit minus 18.20% and Simos minus 17.61%. In Nasdaq, Old Dominion lost 3.17%, and in the industrial Dow Jones, just 4 of 30 closed in positive territory. In the pre-market now, most listed companies are moving unchanged, with the Chicago futures giving no clear direction. In Asia, the Hang Seng gained 0.31%, close to a near 12-week low on the back of an unexpected contraction in Hong Kong's economy in the second quarter, caused by problems in transit trade and exports. Sentiment has been weighed down by the downturn in industrial activity and the real estate market, while still absorbing the dangerous release of the domestic PMI, which saw a decline for the 4th consecutive quarter, foreshadowing the worst. Meanwhile, tensions between Beijing and Washington are worrying investors amid the visit of US House of Representatives Speaker Nancy Pelosi. Moreover, the Chinese seem to have taken both the recessionary wave in the US and the IMF's knee-jerk report, which revised down to the country's expected economic growth rate to 3.3% instead of 4.4% seriously. Japan's Nikkei followed with plus 0.53% in a session permanently in positive territory, Shanghai at plus 0.30%, Shenzhen at plus 0.20%, and Topix at plus 0.27%, while only the Australian 200 lost 0.50%, mainly weighed down by the commodities and mining sector. Europe's markets are moving in an area of volatility in the shadow of uncertainty over the major energy issue, while the critical Italian political issue that has begun since Mario Draghi's resignation remains open. Euro Stoxx 50 is down 0.25%, The 600 is at zero, while both the DAX 40 and CAC 40 are at minus 0.05 and plus 0.20% respectively. In ASE, Greece is tentatively moving minus 0.15% in the general and 25 large-cap indices, with the banking sector at plus 0.70%, with turnover remaining extremely low for another session. For now, support at 845 points is in place. US Treasuries saw modest sales yesterday, with a 10-year yield tweaking 10 base points to a 2.74% yield to maturity, to see further deterioration in yields at the 10-year maturity at 2.54% and a 6-month low. The 30-year remained at 3%, with the spread between them remaining wide, reflecting high implied volatility. The 2-year held 32 base points higher than the 10-year, while in Europe the German Bund yield jumped to 0.85%, our spread estimated at 218 base points, the Treasury spread at 1 base point and gilt at 104. In the forex market, significant medium-term levels were lost by the dollar index, which is already losing 4 points from 20-year highs, looking to clink below 106. The exchange rate against the euro reached 1.02, while the yen weakened, moving away from 2-month highs, with the exchange rate against the US dollar returning to 133 per dollar. The Chinese yuan saw 6.80 per dollar at the 2-month low in the shadow of the mini-crisis threatening to erupt in US relations with Asia. The Canadian and Australian were down, while the Swiss saw a quarterly high of 0.95 per US dollar. New worrying data in the energy equation came from China, whose government announced a renewed downturn in industrial activity, so that demand from the largest oil importer is tending to shrink. All eyes are on today's supply announcements, although expectations for increased production are poor, since on the one hand it has already been announced they are short by 4.5 million barrels, and on the other, Biden returned empty-handed from his recent visit to the Middle East. Brent stabilized around $100 per barrel, while crude hunkered down to a 6-month low around 93 to 94. Gasoline regained $3 a gallon. The GNX General Index remained unchanged in an otherwise quiet session of modest volumes at minus 0.26%. The spin is at minus 2.30%, with platinum remaining at a 15% annual loss at $880 per ton, while the SGSA also lost 1.53%, with silver failing to hold above $20 per ounce. SG8A managed a small gain of 0.69%, and TTF remained above 200 per million thermal units, while Henry also lost $8 per megawatt hour. Finally, in the fried market, the Baltic closed negative for the 7th consecutive day, moving toward its 4th consecutive down month ahead of the risk of a severe recession in the coming period, and the main variable being reduced demand for minerals from Brazil, South Africa and Indonesia. Supramax, Panamax and Capesize are also in negative territory. In terms of economic announcements, today we are expecting the composite PMI in the UK, the non-manufacturing PMI in the US, and shortly afterwards, the weekly change in crude oil inventories there. In terms of corporate announcements today, we're expecting the financial results of CBS, with projected earnings per share of $2.18 and revenue of $76.4 billion. Booking with projected earnings per share of $18.25 and revenue of $4.34 billion, and Moderna with projected earnings per share of $4.54 and revenue of $4.07 billion. Yesterday, financial results were announced by AMD, with earnings per share of $1.05 and revenue of $6.55 billion, both exceeding forecasts. Caterpillar with earnings per share of $3.18 and revenue of $14.25 billion, with revenue slightly below forecasts. And PayPal with earnings per share of $0.93 and revenue of $6.81 billion, both exceeding forecasts. Special mention is in order for Starbucks management, which achieved a new record in turnover of $8.2 billion for the April-June period, thanks to the expansionary policy of its new 1,653 stores around the world. top Federal Reserve officials on Tuesday reiterated their plans to continue raising interest rates to curb inflation, and the comments proved enough to push Bitcoin and other cryptocurrency prices down. In recent hours, however, they appeared to be gaining ground. Bitcoin fell for a fifth day, but in the last few hours it seems to be tentatively trying to climb back above 23,000. Ethereum managed to reach $1,677 last night and is currently hovering in the $1,630 area. Altcoins seem to be steadily climbing in the last few hours, with Optimism, ApeCoin and Ethereum Classic, which have kept us busy over the last few days with their big ups and downs, posting double-digit gains of 16.29%, 16.6% and 10.10% respectively. The exception is Solana, which is down over 4% since it was reported that hackers attacked over 8,000 wallets, grabbing user funds worth over $5 million. This event comes on top of the midnight attack on Monday on the Nomad Protocol cross-chain bridge, from which hackers drained around $200 million. Thank you for joining us today. It was a TRADER24 daily global market overview. Stay tuned for our next comment on the financial markets.